Now, in this fintech and corporate finance, I take you two aspects. If you take time value of money and risk out of finance, there's nothing else which remains. Everything is deterministic. Then it's accounting. Take the numbers and finance is done with. Okay. And I say we live in exciting time because nowhere in the history of so-called fiat money we had seen. I think you are second year students. If suppose LM curve is a horizontal line, flat, close to 0%, and IS is normal, your saving investment curve, which is downward sloping, how would the markets clear? I'm just sending the question for your thought. Okay, I'm not looking for answers. I'm simply saying one question is that we have had a situation of zero interest rate for a very long time, and I'm going to discuss this part of our risk and interest rates, what you are doing, not knowing what you are doing, and I will explain to you what do I mean. We are taught alphas and betas. There is a risk-free rate. I ask this question as a practitioner, not as a theoretician. Is there a risk-free rate? Government, so far we assume the governments don't default. These are gilt-edged securities. We have had situation wherein if government defaults, okay, there's a problem. So we are facing, for us, the risk is basically measured by standard deviation, whatever it's worth. I'm not getting in detail. I think then finance theory has evolved into, value at risk. It is expected shortfall and stress testing of banks. Particularly, it was, and for your information, if you're not aware, maybe aware, that today SEBI has made, earlier it was only the debt schemes, every mutual fund has to go through a process of stress testing of their debt schemes. Now they have made, and I'll explain to you. Now they have made stress testing of equity schemes also mandatory. I didn't understand the logic anyway. Be that as it is. So stress testing basically means that in case there is an interest rate risk, there is a liquidity risk, and there is a interest rate, liquidity, and one more risk they have, liquidity risk. So what will be the impact on the NAV? So you suppose the credit rating goes down by a percentage point by default risk, or suppose the liquidity is down. If suppose what is the gap between buying and selling? So what percentage of your NAV will be impacted if you take different scenarios? So that is what is stress testing all about. So in terms of understanding risk, the theory tells you this. And of course, these are different models wherein in the world of betas, you try and specify which beta 1 or beta 2, factor betas. Real life is basically different from theory in the sense that one is the cost. If you're looking at cost of funds, there are a number of examples. One global example is basically RJR Nabisco. If you look at the cost of funds there, what you contract and what you actually got, and recent cases of default in number of like Diwan housing, for example. So you thought you'll get 9%, ultimately end up getting virtually zero. Okay, it was your paper became worthless. Risk of regulation. Look at Paytm. I'm not saying regulatory risk. They had some. They were issued several guidelines, several instruction and cautions that they better do the KYC and due diligence of their accounts. Market conditions. So market conditions can change. COVID actually facilitated or accelerated the use of fintech, but conditions can change, and you might see a slower growth in that. Geopolitical, currency, operational, and compliance risk are significant risks which are not covered by your betas and and standard deviation. Data privacy. I'll just spend maybe 2 minutes here. You'll be surprised. I received a letter in 2017 saying your account in RBS is irregular. Please regularize your account immediately. I had never opened an account with RBS. Now, I wrote a letter to the bank asking for my KYC documents and also sent a copy to RBI. As expected, no reply came. Very recently, there was one of our classmates and friend. He got a call and purported to be from ED and CBI. He was made to get confined in his room for 2.5 to 3 hours. And he's not a junk, he's not a joker. He is a IMA graduate with 30 years of experience. If you think any one of you can, I'm pulling a fast one. It was a horrifying experience. And right, so the point is that they are masquerading as ED, CBI officials, and he said, Naresh Goel, 2 crore rupees deposited in your account. So you are under arrest, and FIR has been filed in Mumbai, and police is going to come anytime. And finally, they gave him a account number, saying you create an account in your. Nobody should enter the room where you are. You are in camera. I'm just saying that this is just ED is coming to you, and today, unfortunately, we have in this country we made ED virtually like a mad dog, and which can really put you to dock without being part of it. That's not important. Question is that your data privacy is under. You get phone calls from, it happened recently, okay, to our relative, +92. There's a, and say your son has been abducted from Mumbai. And then I think, of course, fake accounts. Bank account, which was so-called dormant accounts, they were being used for, today with the, I will not say artificial intelligence. It doesn't really require intelligence. It is just using the digital transformation technology. And one of my friends who's an IT expert, he told me that those who are waving as saying V sign and all, there are machines which are tracking your fingerprint, which can track. Okay, and they can take so your fingerprints are at risk. So never always never show your fingers like that. This is not scary. I'm not trying to scare you. Please remember, that's not the objective. Objective is to share with you something which I have, people have experienced. And today there are machines which can copy your signatures absolutely. Okay. So in the sense, we are living in an age which is different. The machines are copying your signature, then nobody can check it. They'll say it's absolutely fine. And ultimately it's manual. The guy at the counter will give them, of course, they might get suspicious if you put a saying 5 lakh rupees cash to withdraw and your account has not shown. He or she must have a sense of, intelligence to say this guy never withdraws so much of money from the account in cash. Okay? But that's different. Money laundering. Now, another problem comes is that some of these fintechs probably has an issue with respect to saying, can these be used to launder money? Okay. Possibility. One is not denying that. I have taken very quick 3 case studies. Yeah, come please. In case of these 3 cases I've taken from, it's very, very, and you will learn a great from these. Basic prudent principles were thrown out of the window. Let's take case 1. We've all heard about LTCM. Long-term capital management was a hedge fund. Okay. Although not part of but corporate finance. This is the hedge fund which was exceptional. I call this na bhuto na bhavishyato, the best ever intellectual capital assembled under one roof. Okay. John Merriweather, the chief dealer at Solomon, they had perfected the system of arbitrage, the debt arbitrage. This is the return in debt arbitrage they earned. 21, 43, 41. You can't get in equity. This is the annualized return in debt arbitrage. They got into equity arbitrage and leveraged. Okay. And leverage killed them. Now, and Mind you, there are two Nobel laureates there. Okay. Now, they advised at times, but they were indifferent in a way. John Meriwether said everything is fine. Okay, we know what we are doing. Warren Buffett's famous words: the risk comes from not knowing what you're doing. They were masters in debt arbitrage, but once they went into equity and other arbitrage, they lost. They lost in 5 weeks what they made in in 5 years. Enron. Now everybody knows them being crooks. They were Jeffrey Skilling. Jeffrey Skilling was basically trying to create an Amazon of energy. Okay. And he was ex-McKinsey. McKinsey was their consultant. And one important point: in order to get debt, they created 3,000 SPEs, special purpose enterprises. And I'm telling you from experience that any financial controller worth his salt in the world, can you control 3,000? If you have a 3,000 just listing of 3,000 names, okay, can you control 3,000 entities? They took debt, and basically, of course, some accounting issues in the sense of they were taking as revenue some of their derivative contracts. Okay, and so again, the huge amount of debt. Lehman. Again, Lehman was a 300-year-old investment banking firm. It was in fact a general store in Germany, which it ultimately shifted. And at one time, their balance sheet and money was about $20 billion plus. And again, the same error. They took debt far in excess, or they were leveraged far in excess of they should have been. Okay. Of course, the genesis is different. But I wanted to stress is that the risk is critical part in both corporate finance and fintech. What risks are you taking? Today, for example, fintechs are not making money. Okay, how far you can really burn money? How long people will keep funding you money? Okay, the war chest, the example like Baiju and all. Okay, which is the failure of they try to revolutionize education, but in the process, okay, they failed. Of course, now they're in confrontation with the investors.